Still 3 minutes ahead of when Silas would do it, Sandra, so we're good.
I know. I'm still starting on time, and this is being recorded now. So we're not on Silas time, right?
Correct.
So welcome everybody to agent development training today. I am not Silas. Silas is on vacation today, but I'm happy to host us today along with Steve. And we actually got Steve has a lot of insight and knowledge into this whole business, right? He's been doing this for a long time. And one of the things that I've learned quite a bit from him as we've had conversations is about doing policy reviews and how to bring up the issue of life insurance reviews. So that's our focus today, because this is a prime time in the year to really reach out to our clients and say, hey, how are you doing? Let's sit down and review, right? So with that, Steve, I don't have any other words of wisdom, but I'll let you take it away, and I'm going to let some more people in.
All righty. Well, I know the topic is policy reviews and life insurance, and Silas left me at home alone, so I am going to go off script a little bit here and talk about life insurance a little bit different than I anticipated because the way we're doing it is not working. Okay. And I want to share my screen and show you why.
Hang on, I'll let you do that.
Okay.
And it's interesting you mentioned life insurance, Steve, because that actually is one of the topics we talked about in our new agent roundtable yesterday with our Indiana new agents.
Yeah. So what I'm showing you here is this was our life insurance sales last year for teams. And so when we look at this, last year Silas's team did 275,000 as a team in life insurance. Okay. And then I think Gary did 70,000. And then I don't even know if Derek showed. Yeah, Tyler's at 6,000. Derek's at 24,000. So altogether, we're probably around 350,000. Okay, as a team, as a territory. Our top agent last year wrote over $1 million just in life insurance. 699,000, 695,000, and the reason I think we're struggling is we're approaching life insurance wrong, in my opinion. And I'm going to kind of share some reasons why I think that. But obviously, when I looked at these numbers, we've got to do something different because life insurance is the one product that is not regulated by the government. The government keeps their hands out of life insurance, where everything else the government puts their hands on and does certain things. But life insurance is also the one product that we sell that everybody needs because everybody is going to use life insurance at some point in their life. Unless Jesus comes back before we know it, we're all going to need this. And it's a very underutilized product that we offer. And it's the highest commission product that we offer. And I'm sitting in, so when Silas is talking to me about, how can we help new people get up and running? How can we get new people making money quicker? Because I'll be honest with you, there's, you know, Kevin McIntyre's on this phone.
Mm-hmm.
Or on this call, he's going to do just fine if he never sells a life insurance product. Okay. He's doing well financially. A lot of people on our team are doing well financially, where I think life insurance, because it's a little bit different, it's not the guaranteed issue stuff we're all getting accustomed to. I think people just kind of put life insurance on the back burner as if, well, I don't really want to get involved. I don't know how to do it. I don't know what products to show. And I think we're doing our customers a disservice because everybody's going to need this. So instead of talking about life insurance as part of a policy review, I think we need to start having a strategy to deal with life insurance sooner than later. Now, I'm still a big advocate that I don't think you should deal with life insurance on the initial appointment. I think on the initial appointment, you get their health plan, you get them their sub products. But we used to teach, do a policy review 3, 4 weeks later and then talk about life insurance. I think we need to start talking about life insurance 2 or 3 days later, a week later, because it's something that's very, very important to this whole process. And so what I'm going to talk about is life insurance as part of the 3 component solution. So what do I mean by that? Again, everything that we do, or at least we should do, should revolve around medical bankruptcy. That's what makes health markets different, is that we're not just trying to sell a product, we're trying to solve a problem. And the problem is medical bills are the #1 reason why people file bankruptcy. And most of the people that file medical bankruptcy have health insurance. And so what is the problem? The problem's lost income. Okay, that's what we're trying to protect people against. They don't need us for the health insurance. They can go to the ACA and do that. They can do it themselves. They can call the marketplace. Our job is when we get the opportunity to meet with people, we need to let them know that health insurance isn't enough and that the reason people are filing bankruptcy is lost income. And so we touched on this a little bit last week when we talked about the supplemental products. But again, 61% of Americans live paycheck to paycheck. So that's really easy to understand when we think about selling the supplemental products, because again, how are we going to cover the day to day? How long can we be out of work? Can we pay our health insurance deductible? That's easy for us to grasp. But what I think we need to start really focusing on is the fact that life insurance is the ultimate loss of income. So again, if 61% of Americans are living paycheck to paycheck, and then you take this next statistic where 60% of US households have some life insurance and half of those are underinsured, only 43% of Americans could cover a $1,000 expense with savings. Again, the question we need to start helping our customers answer is what happens if a breadwinner died? Most people are not prepared. And it's going to cause financial chaos when people are living paycheck to paycheck, they don't save money, and then all of a sudden they lose some income permanently. This isn't like I get in an accident and I'm gonna be able to start earning money again. The money is gone, and most people don't have enough life insurance. And most people cannot survive financially if something happens to a breadwinner, which is why that's also one of the reasons why people file medical bankruptcy. It's not because of the medical bills, it's because they lost income and now they can't pay anything else. And so when we sit there and we think about what we do at Health Markets, we need to start talking in terms of the 3 component solution. Okay? If we want to reduce people's chance of medical bankruptcy, we have got to start focusing on all 3 components. Obviously, a couple weeks ago, we talked about the first component, which was getting people a good health plan. Okay. Last week, we talked about the second component, which was getting people supplemental income protection to help pay their monthly bills and medical bills. And the third component is we've got to start really helping people get their number for life insurance. Now, the reason I like this picture is because this is the way I think we all need to start thinking. Because here's how most reps think. I have health insurance, I have supplemental, and I have life insurance. And they're not connected. So that's why it's hard for people to talk about all this stuff, because it's like people invited me to talk about health insurance. And so that's what I'm going to talk about. And I really don't want to talk about some of this other stuff because I don't want them to think I'm trying to oversell them and blah, blah, blah. Guys, we have to build our business around this picture right here. This is who we need to become. We need to become an organization that when we meet with people, we let them know they're still exposed. We let them cover the exposure by talking about all 3 components. Now, like I said, the first 2 components I believe we should do on the initial appointment. But then when we end that first appointment, we should start setting the stage for the third component, which is life insurance. And so what I'm going to do is I'm going to show you guys how I'm starting to approach this now. And this isn't a new idea. It's an idea I used to do all the time, but a few years ago when Silas asked me to start helping the new people, he wanted me to kind of pull back a little bit, make the products a little bit easier and stuff like that. And so my life insurance sales started to really suffer because of that, because I was focused on this. But then when Silas comes to me and says, how can we help new people make money quicker, get their FYCRs, hit their agent milestones? Well, then we need to go back and start teaching these people life insurance right away, but not all life insurance, specific products that can fit this story right here. So I touched on one last week, which for new people, I think this is a starting point for you, and that's showing the United Healthcare Term Life Safeguard as a critical illness product. If you will just start doing that, that's going to start building your life insurance sales. It's going to start building your income. It's going to start building your FYCRs, because when I talked to Dan Garrison at our tier 3 and tier 4 meeting, all those people I showed you earlier that were way up in the stratosphere, guess where they start? They start by showing living benefits plans as a critical illness product. Now, we have 3 different living benefit plans. The first one is, again, the United Healthcare Term Life Safeguard. That's where I think is the starting point for everybody. Transamerica has what's called the living benefit plan. That's a very good plan. They've actually changed some of their things, so people can't even get that unless it's 250,000 or above. And then finally, Mutual of Omaha's Term Life Express has some living benefits built right into it, but you can do 100,000 for that. So what I always tell the new people is start with the United Healthcare Term Life Safeguard as a critical illness. And if that's all you ever do, your life insurance and your income and your FYCRs are going to explode. But if you can, once you kind of get used to doing it, you can graduate into the Transamerica Living Benefit or the Mutual of Omaha Term Life Express. You can provide more coverage. You can make more money because it's higher commissions, but it's a little bit harder to explain. So I'm not worried about those things for you right now until you get into an established pattern of showing the safeguard from United Healthcare, and just show them the 15, the 25, and the 50, and just ask them which way they want to go. But what I want to talk about now is how I transition into talking about life insurance as a death benefit. Because when I talk about the living benefit plans as a critical illness, I'm not worried about the death benefit. But we still need to help people with their death benefit. And so here's my transition to life insurance if they have dependents. Because if I'm talking to a single person with no dependent, the living benefit plans are the perfect life insurance plans for them, because it gets them the living benefit because they don't have anyone to help them out. And it gives some life insurance so someone can clean up a mess if something happens to them. But when people have a family and they have things that they need to protect, this is my transition. So after I go over the health, the subs, we get all the apps done, here's my transition. I just say, now, before I go, there's one last thing we need to discuss, and that's your life insurance situation. Now, we don't have time to do anything about it today, but I want to learn more to see if you have enough and the right type. Because again, there's a very specific product I think that if we will start showing, people are going to be interested in it, okay? So then what I do is I ask the questions on page 3 of the fact finder to determine how much they have. So at the bottom of page 3, I don't fill this out when I do the fact finder when I first meet with them. I do this after I've done the health and the subs. And basically all I do is, now I've done the ACA, so I already know who the primary breadwinner is. So I don't ask the question, do you feel if you have enough? I just ask, you know, John, you're the primary breadwinner. Do you have life insurance? Yes or no? And then how much do you have? And that's what I stick in this column right here. Now, where it says, how much are you paying monthly? I don't ask that question. Because number one, it pisses people off. So I never ask how much they're paying for stuff. What I ask here is, Mary, do you have any life insurance? If so, how much do you have? Then I'll ask, is it term or permanent? Then I'll ask, is it through an employer? And then my final question is, and this little sentence here reminds me to say, do you have the old type or the new type? And then I shut up. Because most people at this point, what they're going to say is, I have no idea. What do you mean? And here's the new type of life insurance. It's the Transamerica Super Term with the income protection option. Okay. Now, the reason this is important is, what was our whole presentation about? Income protection. When a primary breadwinner dies, are they going to need income protection? And so what I have here is, when they say, what do you mean? I have a look. Transamerica has a nice little presentation on the income protection option. It's just a rider you add to their term plan or their living benefit. But basically, the whole gist around this is important is, worried that your loved ones aren't prepared to handle the money you leave behind, or that they'll exhaust a lump sum death benefit before it covers all their needs. That's understandable. Many people who receive a large sum of money spend most, if not all, of their funds within a few years. That's why we created the income protection option, to help provide your family with a pre-planned income that can make their lives more manageable after you pass. And so here's how it works. And I actually went too far. Okay. So basically, how the income protection option works is, you can take the death benefit and you can spread it out. So the first thing that we want to do is, when someone passes away, we want to give an initial lump sum. That can cover funeral expenses, help pay off the house, and cover other debts. Okay. The second thing we want to provide is a guaranteed monthly income. This provides a reliable income stream for up to 25 years to ensure that the money will last as long as intended. Now, you can do a final lump sum. I really don't do that. I just do the first two. I pay off their debt, their mortgage, pay for the funeral, and then I provide the beneficiary with a paycheck for 5 to 10 years. Okay. So the reason this is important is, when you spread out the death benefit over time, it's actually going to give them more death benefit for less of a face amount. So it's going to save them money. So in this particular example, there's $1 million need. If they just bought $1 million, it's $563. With the IPO, it's $193. So it's almost a $400 savings. Okay. But again, the reason this is such important is, it's a guaranteed income to your loved ones after you've passed. It's a flexible structure. Designate the income to those you love. It's a long-term reliable monthly payment in place of a one-time lump sum, and the lower monthly premiums for the same death benefit. Again, guys, one of the biggest reasons why this is important is, let's say someone passed away and they got $500,000 and they did everything right. They invested it, they diversified. What's happening to the stock market right now? It's dropped. People are losing money right now. Okay. Now, we can go into the whole debate if it's right or wrong. That's not what this is about. But the bottom line is, people can do everything right and lose the money, and they can't get it back. The nice thing about setting up a monthly payment, doesn't matter what's going on with the stock market. These people are going to get a guaranteed paycheck for as long as they're designated. So as a policy holder, I can tell this policy what to do before I ever need to use it. Because Life insurance is a proactive policy. All other life insurance is reactive. And so I can set this up ahead of time so that I don't have to worry about what's going to happen. I mean, think about this. What if I'm a single dad and I want to leave $500,000 to my daughter? Do I want her to get a $500,000 check, or would I like to spread this out over 10, 15 years so she doesn't go buy a Jaguar, go around the world and have nothing left to show for it, right? And so that's why this plan is so important. So I'm not going to worry about this example here because I have an actual example I'm going to show you. But so once I get done going through this little presentation on this new life insurance, I just simply ask them, would you be interested in this type of plan if it worked for the budget? Guess what most people say? Yeah, because they've never seen anything like it. Okay. So then what I'll say is, let me gather some information so I can shop this out for you. And then I go to the last page of the fact finder, I do the dime, and I just say, how much debt do you have? Auto, student loans, credit cards, and I write the number in for the primary, write it in for the spouse. Now, I already know their income because we just did the ACA. So I just say most financial experts say you should replace 5 to 10 years worth of income. Which would you be more comfortable with, the 5 or the 10? And when they tell me, I just circle it on there. Do you have a mortgage? And if so, how much do you owe? And then I write in the mortgage. And then I don't do education here. I'll show you where I do education later. I do end of life where I usually just pop in like 25,000. And then I just say, okay, let me run some numbers for you. When would be a good time for us to get back together so I can show you what I found? I'm talking in a couple of days. I'm not talking a month from now. I'm talking about let's get together in a couple of days because I'm not done protecting them from medical bankruptcy yet. Does that make sense? So again, I need some time, go do some shopping. So here's how I present the income protection option. So this is an actual example of a client of mine. So they had 30,000 in debt. He made 50,000 and they wanted the 5 years. So it's 250 for him, 125 for her because she made like 25,000. They had $95,000 left on the mortgage and their education was 25,000. So his need was 400,000, hers was 275. They each had 100,000. Are they a tad bit short? Because again, that's what LIMRA says. LIMRA says most people are $100,000 to $200,000 short on what they actually need because most people never take the time to do a needs analysis. They pick a number out of the air. And for a lot of people, 100,000, 250, even 500 sounds like a lot. And it is, but it may not be what you need. And that's why we need to do this. So again, this is what they need. So I went, and you have to do this on the Transamerica quoting tool. You can't do this on Quote Connect, but you can create a proposal that'll break down the income protection option. So in that particular case, based on their numbers, because guys, the most important thing that we have to do with life insurance is get them their number, not what you think they need. Have them tell you what you need. So when you present a solution, you're presenting what they told you they need. You can never go wrong with that. Okay. I learned that several years ago from one of our top life agents, Jeremy Stern. His very first thing to do before he ever talks about any other type of life insurance, long-term care, indexed universal lives, all this stuff, he goes, most people don't have their number. I've got to do that first before I do anything else. And so in this particular case, to take care of their debt, their mortgage, and the funeral, they would need 148,000 at the time of death. So the wife would get the 148,000, she'd pay off the house, pay off all the debt, so she's debt free, and then she's going to get $4,200 a month for 5 years. So when you add all that up, it's $400,000. But because it's spread out over time, we only need to buy $388,000 worth of life insurance. So the benefit to the beneficiary is she's getting a paycheck over time. The benefit to the policyholder is he doesn't have to buy as much to take care of his family. Now, when I sit there and I show this to a wife, and I'll ask, now, Mary, if John dies, would you rather have a check for $400,000 to figure out what you need to do? Or would you rather have this? 99%, I'm going to say 99.99% of the wives are going to say, that's what I want. Because women want security, and it scares them to death to figure out what they're going to do with that big money, because they're afraid they're going to get preyed on, people are going to take advantage of them. And so the whole idea is, when I explain this to them, I'll say, look, Mary, if John passes away, we're going to write you a check, or Transamerica is going to write you a check for $148,000 so you can pay off all your debt. You can pay off the home. So now you're starting over with no bills. And then John's paycheck is going to be with you every month for 5 years. So even though John's not here physically, he's still here financially. So would you be able to survive on $4,200 a month for 5 years so you can get your life back in order with no debt? And when she says, yeah, and that's what I want. Okay, John, how long do you want this for? 10, 15, 20, 25, 30 years. Because the minute she says that's what she wants, if he wants to stay married, what's he probably going to have to do? For those of you who are married, okay? Because again, now, because see, a lot of people, they don't like life insurance because no one likes thinking about their death and all that kind of stuff. But when you focus on the income protection aspect of it, not the fact that John's dying, the fact that Mary's going to be taken care of, what do you think that does for John? I'm taking care of my family in a better way. Okay. So let's just say this person decided, let's do the 20-year. So if you did this at $63.25 as a tier 1 agent, that's a $295 advance and $788. Tier 2 is $355 and $948. Tier 3 is $389 and $1,000, and tier 4 is $412 and $1,100. And all you're doing is you're getting people their number. Okay. So before I move on to the next product I want to show you, does anyone have any questions? Or Sandra, is there anything in the chat over approaching it this way?
There's nothing in the chat, but Kevin has a question.
Steve, just a couple questions on this one. How can you designate more than one beneficiary, for one? And two, what if the beneficiary passes away? Does it work like an annuity where it just cuts off, or can you designate kind of a secondary?
No, it just goes to the next beneficiary. So again, if you die and you have a will, it's just whatever's remaining is going to go to the estate or whoever you designate. So
Okay.
again, if it's on your wife, it's always smart to have a contingent beneficiary, being the kids.
Mm-hmm.
You know, because again, it's my understanding that if the income protection option is on there and the primary or the beneficiary dies, you have the option of, let's just say you have 3 kids and you're splitting at 33%. You have the option for the monthly benefit to go 33% to the kids, or the kids have the option just to get whatever's left and split it 3 ways. Does that make sense?
And that's assuming you don't take advantage of updating your beneficiary should your spouse pass away.
Right. Yep. So yeah, so again, it's just, so as you see how I approach this whole thing with life insurance, I'm not approaching this life insurance as, oh, by the way, let's talk about this now. Do you see how it's connected to the medical bankruptcies?
Well,
It's all about income protection.
And I think a lot of us, me included, you know, it's been, you know, for years, it's always been sort of an afterthought, right? Oh, by the way, you know, we have life insurance too. Is that something you need help with, right?
Exactly.
So making it more of a proactive step. And I don't know how you guys feel, but how do you feel when you see somebody have to post a GoFundMe for the funeral expenses? It's like, why didn't somebody talk to them about life insurance and it actually, and maybe the affordability of that life insurance?
Or what's worse is when you get a phone call saying,
Ugh,
you know, John passed away. I see your card here. Did you guys ever talk about life insurance?
mm,
No. Oh, okay. Well, I see it says life insurance on your card. Why not? Guys, all we have to do is talk about it. Now, I want you to understand something I said that when after I did that little brief presentation on the income protection option, how did I get the appointment? Would you be interested in a plan like this if it worked for your budget? No, I don't think I need that. Okay, did I ask? But if they say, well, yeah, okay, well, let me get some information. When can I get back together? Do you see that's a no pressure way of doing this? And if you start, and the reason I put the protection for life slides on at the beginning was intentional. Yes, it's helping me talk about the message. But if you actually go through those slides in protection for life at the beginning and explain the reason people are filing medical bankruptcy is due to lost income, they can't pay their bills, the ultimate loss of income is life insurance. When you talk about this at the end of the appointment, you're not hitting them out of left field. Like, why are you talking about life insurance? The one last thing we need to talk about is life insurance. Why? Because it's one of the reasons why people are filing bankruptcy. Now, how much do you have? Blah, blah, blah. Is it term or permanent? The reason I want to know if it's term or permanent, because if they have a $400,000 need and it's term, I'm going to replace all 400,000. But if their 100,000 is permanent and they have a 400,000 need, I'm only going to do 300,000 in term. Leave the permanent alone. I just need to get them their number. Again, if they have 250,000 and they need 500, I may try to replace it all or at least replace the 250. Again, you can just start doing that, but you have to give them permission to tell you they want to talk about this. And I found the easiest way to do it is just ask them if they have the old type or the new type, because it's second grade language and they have no idea how to answer it. So that's just a no pressure way into a conversation on life insurance. And then you're showing a specific product that's tied into taking care of the health solution. Because again, like I said, guys, I want you to start focusing on that picture of the three puzzle pieces. It's all connected. We've got to start building our solutions with all three. We just don't do them all in one appointment unless they're single. See, if I'm a single person and I do the health insurance and I do a, you know, term life safeguard, I've done all three because I've got them some income protection, but I've also got them some life insurance. Because single people aren't going to buy life insurance because they don't think they need it. But if they die, does someone have to clean up the mess? So that's why getting someone a $30,000 or $25,000 safeguard plan, you're killing two birds with one stone. But if they have dependents, that's where I want to have a whole nother appointment to try and show them this income protection option. So any other questions on this before we move on?
No, I think we're good, Steve. Let's move on.
Okay. The next thing I want to show you is the Mutual of Omaha's Children Whole Life. Again, how many of you run appointments where they have kids? Does it ever happen? They have grandkids? It's just about everybody we probably come across, right? And Mutual of Omaha has, in my opinion, the best children's plan. Now, I know a lot of people do the Securian. I'm going to tell you why I think Mutuals is better. Okay. So why life insurance on children? Number one, I hope no one ever has to go through this, but sometimes kids pass away. Okay. you want to protect your child's future insurability. Again, I'm going to talk about this in a second about my nephew Liam. But again, it's a simplified application. There's no medical underwriting, minimal health questions. I don't even worry. It builds a cash value. Don't ever talk about that because it's not going to do nothing for them. The benefits never decrease, but it's the guarantee insurability option or the guarantee insurability rider where additional policies may be purchased in the future at several times of different life events without evidence of insurability. So again, the two reasons why we'd want to do this for children is number one, children do pass away. And if anyone on this call that's happened, I don't mean to bring up any wounds. I'm sorry, but it happens. Okay. But the biggest thing that could happen is children can develop conditions that make them uninsurable as adults. Perfect example is several years ago, my niece said, I think we should get life insurance on Liam, who's her stepson. He was 9 or something at the time. I can't remember. I'm like, okay, yeah, I've got this plan. And so I showed it to him. We got her 25,000, and it was the Securian. So at 18, it goes up to 50. And it was like 14, 15 bucks a month or something like that. Okay. 20 bucks. I can't remember. A few years later, Liam got really, really sick. And they had to come to the Children's Hospital in Chicago because, I mean, he was dying. Okay. And they found out he was a type 1 diabetic. He's uninsurable for life insurance the rest of his life. Juvenile diabetes will knock you out of life insurance. Now, the nice thing about this guaranteed insurability rider is that when Liam hits about 23, 24 years old, the insurance company is going to send letters asking him if he wants to increase his life insurance. Here's what we'll raise it up to. Here's the cost. Do you want it? Yes or no? There's no health questions. It's automatic. Okay. Well, this Mutual of Omaha does the same thing. At certain times, they're going to get letters. It's going to go up. Now, here's the cool thing for us. If people take advantage of that, it becomes a new policy. When it's a new policy, who gets paid a new commission at a higher premium? There's people at Dallas Rich and said at New York Life made a killing on this, and that's their retirement now. They sold a boatload of children's policies that as the kids got older, they just started getting more life insurance, and these people just got this residual money coming in out of nowhere for things they did 10, 15 years ago. And here I'm sitting here thinking, how many kids have I seen running around wanting to yell at them from getting in my bag and touching my computer? And I didn't even talk to the people about life insurance on it. Okay. But the other nice thing about Mutual of Omaha is they have a 2-page brochure where the rates are right in the brochure. You don't even need to pull out your computer. So when I go back and I start talking to these parents about getting their number with the Transamerica, oh, by the way, do you have any life insurance on little Johnny? Well, here's why you should consider that. Tell them the story about Liam, all that. And then I just show them this. So if they've got a 5-year-old, they can get 50,000 right away for 23 bucks. It's about the same thing as a $25,000 Securian. Now, Securian will go to 50 at 18, but if he's 5, that's 13 years from now. What if something happens when he's 10? They're only going to get 25. With this, they're going to get 50 right away. So that's one reason why I like this, is because I don't have to go to Securian and get a quote. I can just show them this book. So if I'm sitting with a parent or grandparents, how many grandparents buy the Gerber plans on their grandkids?
I had one. My
Yeah,
mom
I
did
did
have
too.
one on me.
My grandparents bought it on me. Same thing here. This is just Gerber on steroids. Okay? So you can sit there and, I mean, but again, if they just want 10,000, it's $5 a month. So that is just something we can start showing to people. And again, the nice thing about the compensation on this, tier 1, it's 56%. So if I sell a $23 premium, it's $100. couple tanks of gas, maybe a tank of gas if you drive a big gas guzzler. But again, just think about if I would start selling 2, 3, 4 of these every single week, because I'm just coming across people with kids and grandkids. Are my life insurance sales going to go up? Is my income going to go up? Are my FYCRs going to go up? By just asking them, do you have life insurance on your kids? Here's why you should consider it, and here's an easy way to do it. Now, the last thing I'm going to talk, is there any questions on this before I move on?
I don't see any in the chat.
All right. Now, the last thing I'm going to talk about, for some of you, this isn't relevant today. It will be in the future. But some of us run in the Medicare space. And there's a very specific type of life insurance that you should be aware of when you're dealing with people that are older. It's the final expense. And unfortunately, most people talk about final expense for death benefits, which again, if someone has no life insurance, then a final expense is easy, okay? But what do you do with that person who maybe has their funeral paid for? They think they have enough money to cover a funeral, whatever. Is there a way that we can show a final expense plan in a way that no one's ever talked to them about that? And I say the answer is yes. Social Security replacement. If you're dealing with a husband and a wife, and they're both on Social Security. So Kevin, you deal a lot in this space. So do you ever deal with husbands and wife where their only income is primarily Social Security?
All the time.
What happens when someone dies?
Well, now they get, they have to choose what social security benefit they get moving forward, and it's always less.
Right. Well, they lose the smallest number.
Correct.
Yeah.
Yep.
So again, they're living on, he's right, they're living on less money. And so the question would be is, John Mary, I know your funeral's all taken care of. That's great. Most people don't, but you did good. But have you ever thought about what you're going to do when someone passes away? Do you know what's going on with your Social Security? And you would be surprised on how many people don't know. You're going to lose the smallest number. So between the two of you, who has the smallest number? And let's say Mary says, well, I do, it's $1,000. Okay, so when one of you dies, you guys are losing $12,000 the first year. So do you want to learn how to live without your spouse on the same amount of money? Or do you want to learn how to live with your spouse on less money? Well, I've got money in the bank. I understand that, but now if you're losing $1,000 a month, are you going to start tapping into that? And is that going to run out quicker? What's the biggest fear that people have that are retired? They're going to outlive their money. Well, why don't we give them a 1 or 2 year cushion where their money can still grow and we can replace that with a final expense plan? So here's just a Social Security example. This is something that I've come across. So in this particular example, the smallest check was $1,000. So I did a $12,000 benefit on both of them. For the husband, it was $85.94 in premium. For the wife, it was $60.17. Now they may or may not be able to afford it, but I love when the people tell me they have money in the bank. If something happens, why would you want to take money out of your savings if you haven't? Why don't we just transfer some of the risk over to the insurance company and get you $12,000 the first year, so that while you're grieving and figuring out how to do this, you're not making drastic decisions. We're replacing the income. Do you see? We're replacing income. I don't talk about death benefit unless they don't have any. This is replacing income. Now, if you did that, that would be $156 premium between the two of them. And if you sell the Transamerica Final Express Solution, Tier 1 agents, your commission is almost 80%. Tier 4, it's 111%. So if I just sold this to a husband and wife as a tier 1 agent, I'm going to make $1,100 and I'm going to make almost 3,000 FYCRs.
But look at those FYCRs.
Yeah. Because look at those commissions.
Mm-hmm.
So again, I know some people say, well, Steve, I like the Mutual of Omaha. Well, the commissions are less than that. And again, this Transamerica Final Express solution, they actually have a pre-quoting tool that you can put in their stuff, and it'll tell you exactly what they're going to qualify for. The other nice thing about this Transamerica is you can solve for the death benefit, or you can solve for premium. In other words, if someone says, I need something, but I only have $60 a month, you can just pop in $60. This is what you'll get. So again, it's just something that if we will start talking to these people about it. So how do you do that? At the end of a Medicare appointment, we can't talk about this. But can we set the stage by saying, look, you know, what's going to happen to you guys if one of you passes away? Do you have your funeral covered? Yes. Okay. Do you have Social Security protection? What are you talking about? Well, let me show you. Okay, I can't talk about it right now, but basically there's ways we can do life insurance plans that will replace your Social Security incomes. You're going to lose the smallest number. And if they're interested, they'll schedule another appointment with you. If they're not, they won't. But it's a no pressure way to deal with that. So any questions on using final expense as Social Security replacement?
Only
No, I love
question I would have, Cad, as you do these life insurance comparisons, do you like the Transamerica over the Mutual of Omaha final expense?
Yes.
Could you go into that as to why a little bit?
Easier underwriting.
Okay,
Premium wise, they're pretty close. And I like 111% commission.
who wouldn't?
Sorry, I get paid by commission. So if it's close in premium, and then they've also got some concierge stuff that's built in there that it just comes with it. So I'm just a fan of the trans, and I like the pre-qualification. You can just go through and check. You just kind of go through. They have a list of questions and you check it. But I've sold a few of these. Diabetic, no problem.
What's the cancer look back?
I don't know.
Okay.
Well,
If we got time, you got time to
yeah,
go
we'll
to
got
this
time.
week?
I'll show you the pre-qualification questions and we'll see what it does.
All
Okay?
right.
So the last thing I want to end with is, again, the main thing I talked about today is getting people their number. Using life insurance, make sure they have enough life insurance to get what they need to pay their bills, their debt, mortgage, provide income, get kids life insurance. If you're talking to someone that's older, Social Security replacement. But this is where I think the policy reviews come in. Is once we take care of their immediate needs, what are the immediate needs? Health insurance, supplemental income, make sure they have their number for life insurance, make sure the kids have life insurance. Here's where policy reviews can come into play, where things we can do down the road. So the first one here is I will ask people if providing educational funds for their children is important. And they're either going to say yes or no. I don't ask them to rate it. If it's important, I'll check the 5. If it's not important, I'll check the 1. Okay? But then what I can do is start using some other products that are available out there to take care of that. So another one is planning for retirement, saving a fixed percentage of income. Now, if that's important to some people, there's things called index universal lives that create a cash value. They can do that. If someone tells me that's important to them, I don't solve that problem. I refer them to one of my Edward Jones people, let them deal with that, because that's what keeps the referrals coming to me. Okay?
And IULs can be complicated.
They are. And that's not my wheelhouse. I would just rather, hey, is saving a fixed percentage of your income plan retirement? Hey, I don't do that, but I have Edward Jones agents all around Northwest Indiana that I can refer you to. Providing long-term care funds for myself or my parents, is that important to you? Yes or no? Okay. Again, we already dealt with the spouse and children life insurance. We've already dealt with paying off the mortgage. We've already dealt with maintaining the lifestyle. But the bottom one is where I get, if it's a business owner, maybe they want to do like a key employee benefit, a buy sell. See, these are higher level life insurance policies that you'll learn how to do down the road if you want to. But the biggest one in there is becoming disabled. If someone says that's a concern, we have the Plus group where I can fill out stuff, send it in. And so those are things that we can do to provide additional coverage. Now, I want to go back to this educational funds for children. One of the nice things about this is, you're not going to need the educational funds for your children's forever. So I always tell people, let's just go ahead and get this, how much you want. But the product I like to sell for here is the Securian term with the chronic illness conversion agreement. Because that's a term plan that can convert into a hybrid long-term care product without insurability. So I'm kind of taking one product and using it. Let's use it for education. But if the kids get through school, you're still alive. Now we're going to keep this as a long-term care type product down the road where we can convert this into a permanent plan that'll give you long-term care. Again, guys, this is all higher level stuff, but this is things that if you get more proficient with the little life insurance things we talked about, these are things where you can take your life insurance to crazy levels, okay? Especially with the long-term care options in there. But the disability, that's where we can start really doing this. But as new tier 1, tier 2s, I would not worry about any of this stuff if I'm not doing the bare bones basics. So where does it start? I need to do the Term Life Safeguard as a critical illness product. That's where it starts. Then I need to do the Transamerica Super Term with the income protection option if they're interested in it. Get kids their life insurance. If you guys will just focus on those 3 products right now, you might not ever need to do any of this other stuff unless someone asks. And you'll make a lot of money on life insurance, but more importantly, you'll be protecting your customers from the things that they don't see coming. So, Sandra, we got about 4 minutes left.
Can you show the pre-qualifying questions?
Yes.
There weren't any other questions in the chat.
All
And
right.
if you haven't been to your Transamerica agent portal, you do need to check that out.
All right. So let's get out of here. All right, so you come down here, Final Express Solutions, hit launch.
Their site is so much easier to use.
Yep, so you got a new application, pre-qualification, get quote. So pre-qualification. So let's just say someone's 5'3". I don't know. All right, so then have you currently been treated with any of these things? So you said cancer, right?
Mm-hmm.
Have you completed treatment as cancer in remission? Yes or no?
Depends on how long.
No, it's just asking. Are you still being treated for it?
No.
Okay. So you've completed your treatment. How long ago was it treated?
4.5 years ago. More than 4 years. Down at the bottom.
Yep. All right, are you so do you have any of these other disorders? See, there's
No, and by the way,
diabetes.
and by the way, I don't weigh 175, so.
I'm just putting that in there because
I'm just
that's,
kidding.
that, for a lot of life insurance, that would kick them out.
Yeah, I know. I'm just clarifying it for the audience.
So they've got these bigger diseases. Okay. Then are you currently in any of these? No. Do you have any surgeries coming? No. Terminal illness? No. Drug or alcohol? And then any of these things. Okay. Okay. So check eligibility. Select non-tobacco, not even a graded plan. You had cancer 4 years ago and it's select non-tobacco.
That's crazy.
53175. That's
Yeah.
their best rate. So continue to quote. And then what's your birth date?
11/11/61.
So now I can just go select non-tobacco and then we can solve for coverage. So what's your monthly budget? Or we can solve for premium.
Yeah. And this is a final expense. Let's do 50.
$50 or 50,000?
50,000.
Oh, 50,000.
I don't know. Well, it wants to go to budget. Or solve for premium. Solve for premium. There you go.
$229.
And then if I wanted 25,000.
$116. But here's what you're going to get mostly. Steve, I can afford $70.
Perfect.
All right, we can get you 14,000.
And this is final expense. And
Yeah.
so it's really going to help bridge that gap of if my spouse's Social Security benefit is gone. Doesn't quite cover it, but that's enough to get me through.
Oh, but again, this is what you would do if someone doesn't have anything to bury them.
Yeah.
Or you can just ask, well, I just want to be cremated.
Ah,
Okay. $26.
I don't know what the going rate is on cremations.
It's about $5,000 because we just did one with my father-in-law.
Mm.
It was a little over 3,000. But we didn't really have a funeral or anything, but it was, you know, but even if you moved it up to 7,500,
Yeah.
it's $37.
Yeah. That's crazy. I think what's crazy is the pre-qualification questions. Because other life insurance products, I would be kicked out.
Yep.
So
Now,
great.
let's go ahead and do this. So 3744. All right. It's a 267 advance, 713 for a tier 1, 373 and almost 1,000 for a tier 4 on a $37 premium. Kevin, I can see your wheels turning.
Well, I'm here with two brand new agents, and so I'm trying to explain what all this means and how powerful this is compared to some other products.
Yeah. So,
Absolutely.
so again, all right. So any questions before we wrap up here?
No, I don't have any in the chat, but thank you so much for this in-depth review of life insurance products and some key products that we all need to be students of our business. And if you haven't looked at these products for a while, definitely go back and see how they might be able to benefit your clients, especially. So
yeah, again, I think the thing I want to leave you guys with is think of those 3-component solution, that one slide. If you will start building your business around that thinking, this stuff is just, these specific products just become a natural part of the presentation. And and they don't feel like, well, this is a bait and switch. It's like, oh, you just showed me the health. No, I'm showing you a solution to a very big problem. Medical bills are the number one reason why people file bankruptcy. Most of the people have health insurance, and the reason why is lost income. So not only am I going to get you health insurance, I'm going to protect your income, and I'm going to make sure you have enough life insurance. So if something happens, your wife still has an income, or you still have an income. Because what I have found, guys, when you just talk about income, especially in life insurance, when you talk about what it can do for the person who lives, because no one wants to talk about their death. You know, and it's funny, sometimes I'll sit down with a husband and a wife and I'll ask them, you know, would you rather have a lump sum or would you rather have a payment? And she'll say, well, I'd rather have the payment. He's like, we don't need that. I'm like, be quiet, you're dead. This is hers. And they just laugh and stuff, but that you got to snap them in the reality of life insurance is not for the person it's on, it's for the people it's going to. And when I sit there and I show this income protection option to people, the beneficiaries want it. Now, husband may be, if my wife dies, just give me the $275,000 because I'm still going to work. So just, I think the very first thing we have to do to sell life insurance is we have to change the way we think about presenting it. This is not something we go back to 2, 3, 4 weeks later. This is something we address as soon as possible, but not on the initial appointment. That would just be information overload and you're shooting your foot off. So, did I scare your new people away, Kevin?
They're still there.
Yeah, they just said they're gonna go to Bankers Life. Sorry.
Wait a minute. Well, they can come talk to me first. Me or Rick Peterson, they can come talk to me before they do that.
Hey, this has nothing to do with what we talked about, but we're curious in the room for those that were on the call yesterday if Kaleo went to Indianapolis last night.
I did not. He ended up calling back, so
Okay,
we didn't have the appointment. So that was a good
Good.
thing.
good. Just curious.
All right, awesome. Well, thank you so much, Steve. This was, as always, excellent information. I always learn something from you. And if any of you have any questions, concerns, you need either one of us this week, just reach out. And I thank you for being on today. Have a great week.
All right, thanks.